Hi, and welcome to the podcast. We have back with us once again the Honorable and Wonderful Miss Lynette Zang joining us from her studio somewhere in the confines of Arizona. And she's going to be giving us her insights on all the latest financial updates, both here as well as globally. And we're excited to have the normal discourse that we're honored to have with her. So if you're new to the podcast, once again, please do like, subscribe, and share so the channel can grow and others can gain in the knowledge you're currently being afforded. As you know, Ms. Zang has well over 60 years in the financial services industry with a specific keying in on precious metals, more paramount than ever right now. And she's also into food security, shelter, and community, and sharing both the knowledge and the land with her fellow community accordingly, which we are all in one accord there. So I'm honored as always to have her back. Lynette, thanks for joining us. How are you doing this fine morning?
Well, I'm doing great, and I'm very happy to be here. I do want to correct one little thing that you said.
Please.
That was a fabulous intro. It has not necessarily been on gold and silver. It's been on money. And gold and silver are sound money that governments and central banks cannot inflate away. And because of where we are in this currency's life cycle, that's really when the main focus shifted. And that was back in 2002. That's when this trend was confirmed to the gold and silver because of what's happening with the currency system.
Sure. No, thanks for correcting me. I always like to get it from the horse's mouth, so I appreciate you chiming in accordingly. And with that in mind, since we're going to switch things up a little bit on this one, Lynette, I'm going to I'll become more finite with the questions, but on this first one, kind of leave it a little more open-ended. So since our last discussion, what do you see on your radar? What do you think is the most important thing that our listeners should be aware of?
I think they should be aware of the total change in the monetary system that was ushered in with when the President Trump signed the Genius Act. And I don't think people realized that the entire monetary system was just changed. Now, this is not the final reset. I really believe strongly, and the more I look at it, the more I see it, that the stable coins will usher in the visible hyperinflation and to take us into the crisis and take us into the next full system. But we've got reset work to do. But yeah, that's I have to say that is the single most important thing that I am paying attention to, because they know how to make these transitions, and they are getting adoption. They're forcing adoption. Mm-hmm.
Well, it's interesting you say that, Lynette, because I just had this exact conversation with our fellow cohort, Greg Manarino, that we both love. And he said basically verbatim the same thing you did in a complimentary way. But I'll say to you what I said to him. The good news is for both of us and Greg respectively is with our respective audiences, if we know what the enemy is going to do, we can always make our moves and counter moves, and we know where to go into safe haven. So that's the good news is they've played their hand, and now we know how to circumvent that. So at least there's movements, and I know that we have that's fine. We have a respectful difference of opinion on cryptos in terms of their backing, but I'm more of a fan, my team's more of a fan of decentralized cryptos, things that are outside of their scope, which in a sense complements what you're saying from that regard. The second question I want to ask you is, you brought it up, the Genius Act was signed into law on the 18th, establishing a comprehensive regulatory framework, as you said, for stablecoins, aiming to enhance consumer protection, to ensure the stability of digital assets. It all sounds so good, but it seems like an accounting trick to get the American consumer to buy the same debt, fill the gap that other countries are now trying to get rid of. Do you agree?
100%. They, just like they did with the petrodollar when they were shifting the systems, they had to find an artificial market for dollars. And so the stable coins absolutely fit that bill 100%. Dollars and treasuries, 100%.
Yeah, I just thought it would be, I kind of pre-assumed that you would be going in the direction of the Genius Act. So I figured we would follow it up with that and just kind of put a lid on it. But I'm glad that you confirmed that. Again, knowing what they're going to do, we can just go and do the opposite, move around it.
So well, John.
I know, it's kind of getting scary. It's a bit of a clairvoyancy going on. So this is also a very important week, as you know, Lynette, very timely that we're meeting when we are today on the 30th, because today we have the decided Fed, whether they're going to cut the rates or not. It looks like odds are out that current Fed Chair Powell will not cut the interest rates today and opt to wait until September. by keeping rates where they are, is he trying to hurt President Trump's presidential agenda? So we have $9 trillion of debt that needs to be rolled over this year. I would think a lower interest rate would be key in helping the American taxpayer by doing that as cheaply as possible. Can you explain or articulate to our listeners what you think is really going on there?
Wow. Well, I think that Fed Chair Powell is expressing his independence. And I don't think that the numbers that are coming out, the economic numbers that are coming out, warrant a necessary rate cut. And I don't know. I mean, here's the thing, John. You know, we make it sound, well, it would be so much better for the American taxpayer if the interest rates were lower. No, it really wouldn't. Because what are interest rates really telling you? When they drop interest rates, it's because they want to devalue the currency more. How does that help the consumer? It doesn't. So yes, I mean, the lower the interest rate, the more debt you can carry at the same rate. But if this has no value, what good does it do anybody?
Well, no, but we know, Lynette, that the dollar, the Fed Reserve note specifically, is a debt instrument, and it's been dead for quite some time. We've extolled the virtues on that. So what he's doing is killing the old system to bring in the new one, which goes back to your, previously aforementioned point.
Exactly.
So then I wasn't planning on asking you this, but because of what you said, let me just follow this up with another question that I've been thinking about, Lynette, as we expand the space, as we always do. If in fact we are waiting till September for a rate cut, we look at historical patterns, right? What happened 17 years ago with the bailout? Are we going to that again? Are we looking at another stock market crash by September?
I don't think we're necessary. I think we've entered the melt up phase, not the crash phase. So I think this is the final push. And I think we'll see stock markets and bond markets and crypto markets explode upward.
Yeah.
This is what happens before the crash. So no, I don't think we're going to have a crash by September. I think the melt up, which is what I've been waiting for, I'm pretty sure it's being signaled.
Well, here's my question. I appreciate that. If we are, and I think you're right, I think we're at the pantheon of the melt up right about July, August now, that we're basically, for all intents and purposes, in August. Wouldn't the bust be shortly thereafter?
Not necessarily. No, this bust. You think about Venezuela, right? They had in 2012, 13, 14, 15, maybe even 16, I don't know. But they had the best performing stock markets on the planet as the currency was in, and continues to be, inflation. So it isn't really the value of these assets going down, it's the rapid loss of purchasing power. So when we go into this melt up phase, that is, it doesn't, these things take some level of time, right? So we haven't really had that. Yes, all of these markets are severely overvalued, but a melt up looks kind of more like an exponential rise. So shortly thereafter, that's all relative. Timing is relative. And as a technician, I can tell you what's most likely to happen, but I can't be absolutely certain it's going to happen on Tuesday morning at 8:35. The time is always a challenge. It's more about where are we in this trend? And with the push into the digital programmable money, what are we going to have? We're going to have all of these corporations coming out and issuing their own stable coins and creating all of these programs, like the agreement that JP Morgan Chase just made with CoinDesk to open up and basically allow their customers to buy cryptos with their bank accounts, right? So this is stuff that's just beginning. I don't think this is all that short-lived. I mean, but again, timing is relevant. I don't think this is a 5-year piece either, but they've got enough adoption to put this in place. Obviously, they did that. So the push is to spread it out into the public. But when these corporations, just take Amazon as an example, they start issuing their own stable coins. You know darn well there are going to be programs available to the consumers that are so naive and they really don't understand what's happening to get them to use Amazon stable coin. And honestly, my question that I've had forever about what is going to justify money creation, is it going to be more debt or is it going to be purchases? Because those were the two things that I have read repeatedly floated around by the central banks. And apparently it's going to be both. It's going to be both. So now you make a purchase with this, and you just click a button, stable coin, and Amazon can create these stable coins. And that means that they have to buy dollars and they have to buy treasuries in order to back them. So, yeah, I don't think this is going to be a boom, boom. I think we're just at the beginning, and this is bigger because we're shifting from a paper-based system into a digital system.
Right.
So this is much, much bigger. And now it's the adoption push. But what does that do for Amazon if a lot of people adopt stable coins? It means that they make more money. That's what it looks like. They make more money, even as they're devaluing the currency. There's your hyperinflation.
Right. And what I appreciate that. What I was trying to get at, engage, and I think Lynette, from our work together, is how much time, and again, I know you don't have a crystal ball, but there are historical patterns we know. You know better than anybody. How much approximate time, I'm trying to get to my audience, to the end game, and yours for that matter, does the average person have before the Fed dollar is phased out entirely? Whatever purchasing power there is.
I would say, and you can't hold me to this because I could.
Of course. Yeah.
I hate doing timing because,
sure.
But if I really had to guess for absolute end game, I would think that the part that we're in right now, so getting the fuller adoption, I'm thinking out loud, for fuller adoption, probably I'm going to go 6 months to a year. And I think it'll take a little bit longer for people, because I know I'm not going to give up dollars, and hope the physical cash, that's what I'm referring to. And so there are going to be other people like me. I would say probably max 2 years, somewhere within the next 2 years. I don't think currency is going to be, they have not said that they were going to pull the currency. What they really want is they want you to choose not to use the physical currency anymore. And the tool that they said that they were going to use to do that is to put, which they've actually kind of already set up, right? To have chips inside of the bills, and that would charge you or be tied to the banks and whatever rates they were. So negative rates or whatever the rates are. So now when you go to take cash out, they're going to charge you a hefty fee to take the cash out. And should you go to deposit it back in, they're going to charge you a hefty fee to deposit it in. But this is going to be translated, or transmitted, I should say, to the public by Amazon, or Amazon doesn't really take cash, but it'll be by the coffee shop or your local shops where you would normally go in and use cash. It's going to cost you more to use cash than it is to use a card. And so where most people will make the choice to use the card. And we've actually kind of seen that happening since COVID.
Well, they're going to try to discourage people by de-incentivizing it and make it seem like it's because they can't do it without our consent and free will, like you said. And our communities are going to push back because we know what's going on, and the 1%, as we try to increase that number as best we can, as we've said many times before. Well, my other prayer and belief is that Judy Shelton will get in as the new Fed Treasury Chair and gold back it, and we go to a U.S. note prior to 1971, and then this becomes, for the time being, null and void.
Exactly. And that's what I'm battling for down with the Citizens for Sound Money, which is a global sound money movement.
Right.
Here's the key. The gold must be redeemable.
Mm-hmm.
Because if you can't take it out, if you don't like what they're doing, then they can do anything they want, just like they did in Zimbabwe. So yes, I love Judy Shelton.
Yep.
I'm fighting for gold to be part
Same.
of our monetary system again.
Same. And we haven't seen the last of Zimbabwe yet, by the way. I think there's going to be a lot of changes going there, as we've discussed before. So then before we go to the next part, I got to ask you about this because I don't feel like enough people are talking about it, Lynette. And I know that you, like me, like to explore the space because it helps our respective audiences, like you said. As we see the hyperinflation of the dying dollar, that has ripple effects or repercussions. Specifically in the residential real estate market, we're seeing not only a cooling pattern, but major markets like in Tennessee that have been hot for years. Now you have a supply and demand, much like the car repo market. When do you think that will take effect? The fall?
Wow, I think that's already started in the
Mhm.
hottest markets. So, yeah, I mean, the prices, and yet it's interesting because overall, home prices continue to make new highs, but then in pockets, that's where you really see the breakdown in places like Florida and Tennessee and Arizona, where I am. So,
Mhm.
California. So,
Yep.
yeah, that shift is definitely underway. And I'd like people to understand with this, because I did a piece recently on how gold and real estate perform together during these hyperinflationary events and the opportunities that present. You want to hold your purchasing power because in Japan, which is what I think it's likely to look like, commercial real estate dropped 95%. Residential dropped 85%. Now, I bought this property in 2010, right? And people go, "Oh, you got such a good deal on it. Such a good deal on it." And according to Zillow, it's like tripled since in terms of this junk since I bought it. And doesn't that make me feel rich? No, because honestly, they supported that market. It should have the real estate market when the system died 2008 should have dropped significantly more than it,
Right.
right?
Yeah.
That lies in our future.
And I think I told you offline, Lynette, I had a house back in Connecticut when I grew up back east, and our house was short sale, way underwater back then by 50, 60%. So you're right, it should have been more. Now it's going to be. So those who are controlling, like us, when I say us, I mean our communities, the purchasing power equipped with the right knowledge and the right mindset and the right acuity of action are going to get great deals. Now, I'm not obviously rooting for people who have homes to fail or anything like that. I'm saying there's a new system, a new wave of resurgence of opportunity that's coming in here, just like we had with the Great Depression and many times afterwards. For those who are positioned, they can help themselves and then help their neighbors, their communities respectively. We galvanize more people to the table. But I see what you see, and I see it is happening now, and I think it's really going to kick up in the fall, September, October, and then into the early part of next year, which coincides nicely with your timing of 3 to 6 months in the short run. That's why I was kind of making kind of connections there. So thank you for that. There's been a lot of discussion about perhaps revaluing gold to $15,000, $20,000 to help pay down the debt to give President Trump's administration some breathing room. As you know, FDR did this in the 1930s, speaking of historical patterns. Do you think that a gold revalue is a possibility, and what are the implications if that's to happen?
Well, I do think that gold revaluation actually will happen because that is the historic norm when you look at all of these currencies that no longer exist. But 15 or 20,000, just like in 33, since you brought that up, and absolutely, oh my gosh. I mean, you just had, what was it, Michael Barr, one of the Fed members, come out, and what I thought was really interesting in his speech was he talked about these three previous crises. Of course, I don't think he really understands what happened, but he brought up the Depression, which was the kickoff to the beginning of this fiat money system. Then he talked about the 1980s, which was the kickoff to the pure debt-based after Nixon took us off the gold standard in 71. And then he talked about the great financial crisis in 2008, which was really the very end. So everything has a life cycle. And what he was explaining was the beginning, the middle, and the end. And now they're trying to shift us into a new system. I'm sorry, I got a little distracted.
No, that's fine.
Because he was all about, well, it's the regulations, and that, we need these regulations, and then that will protect us and save us, and that's all garbage. Why did we have the Great Depression? Because they took us off the gold standard and printed 2.5 times the amount of money, and I have all of that hard evidence and proof, and pushed it into the system. And you know what, John? It was the corporations, it was corporate debt that was allowed to be turned into Federal Reserve notes. And you can see that 1 in 10, you can see that on the charts. And because there was so much money and it was free, right? And it's a lot more expensive to mint physical gold and silver coins, right? So as the money becomes more expensive and the government wants to spend more money, they have to get this money cheaper and cheaper. And this stuff is a lot cheaper. In fact, $100 bill, it costs them 9.4 cents or 9.7 cents, but you and I have to work $100 worth for that bill, and that would have been a whole lot more. And so when we went into this system now, digital money is so much cheaper and easier to create than even the physical money, right? So they tell you this is $100. Well, it didn't cost them anything. So therefore, I can give you one guarantee, absolutely can give you this guarantee. At some point, all assets go to their fundamental value. Now, people think that that's intrinsic, right? No, that's the market. That's a trading market. That means nothing. The true fundamental value is the value of an asset for its creators. And so when you talk about a gold revaluation, gold forces fiscal responsibility because it performs 4 key functions: a tool of measure, a tool of barter, a short-term store of value for fair payment, and a long-term store of value so whenever you use it, you're fairly paid. Fiat, this junk, takes away that long-term store of value. Who doesn't know that? We go into the digital age. Now this money is only about measure, so pricing something, and a tool of barter, buying something. It's gone are the days where you will fairly be paid for your labor, and certainly gone are the days. That's why it's so important to get gold back in the system again. So will gold be revalued? 100% it's going to be revalued. It's going to be revalued because that's how they make the attempt, first of all, to burn off this debt so they repay it with dollars that have zero, count them, zero value, which if you know what you're doing and you're paying attention, you can also take advantage of it. But in order to get that confidence, they bring gold back as a component of the money. So will it get revalued? 100%. I mean, it's happened over 4,800 times. Crap, it's happened in this country 6 times, right? Yeah. 3 in our lifetime since 1913. It was done in 33. It was done in 71. Now we'll have one more coming in. But we've had hyperinflation and gold confiscation in this country during the War of 1812, during the Civil War. So yeah, do I think gold is going to be revalued? Oh, heck yeah. Do I think 15 or 20 is where it'll be revalued? Oh, heck no. Now, I don't think they'll move to fundamental value on the first revaluation because globally that usually happens 3 times. But it can happen more than that. It can happen less than that. It's 6 times in both Zimbabwe and Venezuela, and they're not over yet.
Right. Yeah, and I'm encouraged to hear you say that, Lynette, because the world is, to your point just a moment ago, is awash with gold. It's in the Philippines, it's in Zimbabwe, we have it, Canada, there's a whole bunch of places. Where, as you know, we're going to talk about silver in a minute, where there's a much more finite supply, but we have enough, way more enough gold, and it puts the control back in the hands of the people. Because when you're talking about the worthless dollar, Fed Reserve notes to be precise, you're talking about something that you touch but has no value, to something that you can't touch that has a questionable value unless it's actually backed. And I'm talking about the stable coins, the meme coins. I'm not talking about the specific decentralized ones. There's a difference, as we talked about earlier, but that's going to have great implications for the BRICS nations, which we'll talk about in a moment. So everything kind of intertwines, as you know. So let's cue up the next obvious conversation. Silver seems to be poised also for a historic run. The dollar moved up 1% a couple days ago, and gold, silver didn't budge. And you notice the Dixie is starting to go down as well, which no one else is really talking about, or not enough, I should say. That kind of strength leads me to believe it can go a lot higher. My belief is that when it breaks the $40 mark, we will start to be off to the races. Do you agree? Do you think we'll have a pullback before silver reaches new highs?
Well, I think anything could happen because it's a trading market and it's about profits, and these are just paper contracts. But I think at the beginning of this year, we saw an awful lot of repatriation of physical silver and physical gold into this country. So you make a super valid point. I also do think that, I mean, whether or not it happens by the end of this year or into the beginning of next year, I think 40 would be low. I think it'll conclude a cup because there's a lot of power there. But
Yeah.
but everybody really needs to keep in mind that all those are spot contracts, that those do not reflect the true fundamental value of an ounce of gold or an ounce of silver. That simply reflects what the market, a trading market, that's what it reflects. And so even today, somewhere in the vicinity of $40,000 if we did that overnight revaluation. And what did we have? We had a 20-to-1. This is, you can barely see it. It's teeny tiny, but that's a $1 gold coin. There's your 1 ounce of silver, right? So that 20-to-1 ratio. And what's that mean? It means the true value of an ounce of silver is $2,000. So even at $50, yes, I do think it's going to run. I think it's going to break above that 50, conclude its huge double cup that it really started back in, early in the 70s. And then the first one got shot down with the Hunt brothers because our government admitted that they would manipulate the price of silver. I mean,
Right.
incredible that they could get away with that.
I know. And I agree with you. And I'm glad you said that, because my personal belief, Lynette, is I'm on the side of Mike Maloney. I think it could go into the 3 figures later this year, particularly given the fact that as people buy it, whether, it's retail or wholesale, mines, et cetera, we've talked about before, that puts more power in the hands of the consumer and less in the banks, and it inhibits their ability to control the shorts of it, the naked shorting and the paper manipulation, because people are starting to finally realize that. Because I get this question, I'm sure you do more than me. Hey, I'm holding a gold paper certificate. Isn't that the real thing? No, you're holding the debt instrument. They're holding the real coin that matters. That's why they're just giving you a receipt for something you don't own. And so as we extrapolate that and own that, it controls their ability to manipulate that, which then gives the people the win and increases the value, especially if you're buying it on the lower end, like now or 5 years ago, 10 years ago, like you've been doing, sets those people up. We're prepared for a win-win situation. So appreciate that. Switching things up a bit, we kind of gave you a foray of this. We see BRICS is increasing in strength vis-a-vis Operation Sandman, with a maelstrom of incoming trade deals to include Vietnam, Indonesia, Philippines, and now the EU. Canada looks to be next. What implications does this have for the already failing Federal Reserve note, which, by the way, as we talked about, has a regularly failing Dixie? Doesn't this help level the playing field for other countries' respective currencies?
Well, I think what we're really seeing is that shift in power and financial power. And some of the choices, the ally lines are being totally redrawn right now. So this is a huge advantage for the BRICS nation, and particularly for China, where maybe they didn't stand a chance with Canada before, but because of what's going on between the US and Canada, now China is looking a whole lot more appealing. So I do think that all of it's a complete transition from old system, old guard, into new system, new guard. And but here's the thing. When you say other currencies, the reality is all of the other currencies are no better than the dollar. The fiat currencies, the government debt-based currencies, they are all devaluing. And one of the things that I do on a very regular basis, and it's such an interesting thing to do, to be honest, is talking about a specific country, I'll go into a currency converter website and I'll pull up that currency in terms of dollars, in terms of the spot silver contract, and in terms of the spot gold contract. I will say this 100% of the time, because I'll look at it like 1 year, 5 year, 10 year. 100% of the time, the dollar performs the worst, right? Then I would say 99.9% of the time, spot gold outperforms everything. And then spot silver is secondary. And it makes sense. Gold is the primary currency metal. That's what they do the reset against. Silver is the secondary currency metal. But pick a currency, go into any currency converter, and it's easy enough to see the BRICS currency. There is no currency anywhere on this planet, if it is dictated by a government and it has a face, because it costs flipping nothing for them to create. Therefore, what is its value?
So good point. Let's talk on that for a minute, Lynette. So we're going to have a discussion there. So to your credit, you did say a while ago, people can dial back the archives on our podcast, that you thought that the BRICS would really start to hit its pantheon point at 2025. I felt it would start last year. We talked about that. Here we see it, about face. You'll note that China had a lot of their manufacturing. I think it's somewhere between 60 and 70% of the companies that were housed in China are now going over to Vietnam. So they have an incredibly powerful workforce. I think what's going on is you're seeing assets in the ground, not necessarily dictated gold and silver, but not that only standalone. For example, Indonesia and Vietnam, I don't know if you're aware of this, they comprise roughly 60% of the world's cinnamon supply. You take a country like Colombia that makes rich crops, coffee beans, it's known the world over. I'm sure you've had a cup or two over the years. So my point is that BRICS can amalgamate away from the Fed hegemony of the dollar and go into their own assets, not just based on currency, but based on what they actually produce, which helps BRICS and helps the countries respectively.
I would agree with that. Yes. I mean, it's like when you go into a world, they want us to think that everything now is just virtual, right? But we still live on the planet. We don't live in a virtual world, unless maybe they'll implant something in our brain at some point, and I don't know what the point of living is for that, but
under their beast system, which I'm not consenting. So
I'm not consenting either. And I'm not consenting to digitize my gold and silver or tokenize my gold and silver.
Right.
I'm not consenting to a lot of stuff. I think we need to be as absolutely independent and self-sufficient as possible, and do it inside a community, because there is strength in numbers, not separate. Everything's been done to separate us. We need to come together and help each other, even if we don't always necessarily agree. I don't think that's a big problem, really.
No, it's a sharing, the free and open exchange of ideas, which you and I do. As long as you agree on the principles of helping each other, humility and selflessness, the rest of it is just, ancillary deeds. It's semantics, right? But my point is, key is to be solution oriented. I'm about that, and you likewise. What better way for these countries' people to break away from the enslavement of control of not only their governments, but our government, which is banker wars, has killed people for years and years and years, than to break away Well, those people are waking up. We're waking up over here in respective pockets. You and I are helping to achieve that to the best of our ability. It allows these people to break away from the constraints and confines of their own country and our country and use their assets in the ground as a workaround. The point is there's always a solution to work around. So that will power up their country to include gold and silver. So it's not just one thing. My point to you has always been, Lynette, in the past, and my audience, is that there's a lot of disparate sort of cliques. I don't like cliques. I didn't like them in high school. I don't like the fraternities and sororities in college because I think they divide people. It's an agenda, right? You've got the crypto community who thinks that's all there is. You have the gold and silver community who thinks that's all there is. The currency community, the this and that. I'm saying that there's a common denominator between all of them. There's inclusivity. There's room for all of them to work together in the right context. And hopefully that makes sense to you.
Makes absolute sense to me, and I agree with that 100%.
Cool. So I just realized something significant that virtually no one is talking about, Lynette. And it's all these little details, right? So you probably know this, but I didn't know. I love to learn. And were you aware that Howard Lutnick, the current Secretary of Commerce, do you know his initial career beginnings, how they started?
I don't.
Well, I thought this was fascinating, and I got to give credit, by the way, back to you for BRICS 2025. You called it. This came from X22, Dave. Apparently, he was a foreign currency trader on Forex.
Oh, there you go.
President Trump appointed him specifically for that purpose. In other words, to help level the playing field in trade and commerce for the specific foreign currency markets in BRICS as the perfect cover.
That sounds like it's plausible, really. That makes a whole lot of sense. That's very interesting.
Something to consider.
Tell you, it is, because if I had not studied currencies in 1987, if I had not stumbled across the non-dollar denominated bonds that took me in that direction, I can tell you right now, I would not know anything that I know today about that. So, yeah, I'm going to look at that a little bit more. I didn't.
Next time we talk, let me know what you think. I think that's a pretty interesting and underlying point that could be sort of a subtle underpinning for what's to come. Here's another interesting thought. This is right up your street. What if President Trump decides to tariff the foreign silver import market? What systemic effects would that have in terms of a skyrocketing price for gold and silver as a result of the tariffs?
Well, we kind of saw that threat in the beginning of last year, didn't we? And happened. Yeah, not only was this the price spiking, but here in the U.S., we just work in derivative contracts, just paper contracts. In Europe, it's the physical markets. And what I'm still waiting for is for the gold that's being held by other countries in the Bank of England. And if they sent their gold, those countries' gold over to us, if they look to repatriate, and the silver too, because a lot of silver came over yet. I mean, that's going to have a ripple effect that I don't think that we've seen yet. And that could push visible spot prices, which honestly, John, I don't. The only reason why I care about them is because that's what other people are watching. So I have to pay attention. But I really do know how irrelevant in the long-term scheme of things they are, because it's about trading. Everything turned into a financial asset. I don't know. Did I answer your question?
No, you did. No, you did. It's fine. And I think you're right. I think it's irrelevant. I think it's an optical, it's like the Dow. It's something for people to look at and point to, but it has no relevancy.
It really doesn't. It's just getting people in that mindset that it has value, and that you can trade it. And I had somebody on my live the other day that said, well, if I had kids or something like that, I would just teach them to be a trader. Well, that's an indication of where we are at the end of this currency's life cycle, because everybody's chasing these bubbles, and it's so much easier to sit there and instead of creating something that brings value to this world, they just trade stocks or meme stocks or whatever it is, right? And then they think because they might get a few more of these that is valuable. Well, it's not valuable if you can't buy anything with that money. Just like my $1 trillion, $10 trillion Zimbabwe note. Can't
for
buy.
now, for now. But it's perceived value versus actual, and it tends to be inverted, as you know. So going backwards and forwards a little bit, Lynette, on this discussion on the silver part, if he does that, or he's already doing that in place, basically what I kind of perceived you to say, uh, can he just revalue gold and silver? And does, is Fed Chair Powell even an issue? He seems like he's just kind of working around him. Does he need to fire him, or can he just work around him?
Well, when you bring up Fed Chair Powell and can he fire him and all of that, I think
Mhm.
that part of what's going on here is that the Fed wants to appear to be absolutely independent. And so that's why he's got to stand up. But, I think it's also been pretty obvious that President Trump pretty much does whatever he thinks and maybe begs a little bit of forgiveness or what have you. But yeah, I think he can do pretty much whatever he wants, honestly.
Yeah, yeah, I think you're right.
We
I
need
think you're right.
a reserve.
Yeah,
To be honest with you, if we went back on a gold standard, a redeemable gold standard, the Federal Reserve is not necessary.
right. I think Greg calls it a 7-second decision just to flip it to gold. And they wouldn't even have to repay the debt, because if you were to revalue gold and silver to its true value, it would put it out of reach for most people. That's what I'm saying. So there's totally, to your point, a workaround. So I think I think he's trying to get the public on his side for their to not need the Fed, and just to make them irrelevant.
Yeah, because, and let's I want to drill in a little bit more.
Sure.
Like, oh yeah, all he has to do is flip a switch. Well, what is the impact of that flip on the public? Because these shifts are never easy. They're great for some people that are prepared, and you want to get prepared as quickly as possible. But no, he can't just, flipping a switch. First of all, you need to repay that debt with dollars that have no value. And you don't go from where you are to an overnight revaluation, because the public would not stand for it. The public would not stand for it. They have to be prepared. They
Mhm.
go, please save us, Mr. Bill, whatever you're going to do, save us. So we have to, I'm sorry, it's just like having physical wars. Do we really need to see kids and people and children dying? No, we don't.
Right.
In cyberspace, some say there's already. So it's the visibility. No, he can't just flip a switch like that. I mean, the public is not prepared for any of this. And as hard as the hyperinflation is going to be, that will at least justify that switch flipping, because as soon as they do it, it fixes the debt. Wait a minute, just stop and think about it. Gold requires fiscal responsibility. So putting gold, just boom, back a currency with it. Well, that debt is where it is. And then you can't create enough money to hyperinflate that debt away.
Mhm.
You have to do that first. That has to happen first. It has happened over 4,800 times first. Then when the population is desperate enough, you come in and you go, this will save you. And it won't take it to fundamental value first. That's why there's usually several times that they do those revaluations. But it does start to change the debt mechanisms, right? When you do that, it does enable some of that debt to be paid off with cheaper dollars and cheaper dollars and cheaper dollars. But you have to get the public's buy-in. There are 8.4 billion people in this world. That's a whole lot more than the 1%, right?
Right. Right.
So you're gonna have to get that buy-in. It's not as easy as just flipping a switch.
I appreciate what you're saying, Lynn, and I hear you. I think the public in general is pretty frustrated and more than ready for change, as long as they understand that it, as you said, it benefits them. Certainly the 1% that are aware are more than ready for it, and I believe are going to do their best to counteract and help the other 99, shoulder the burden, like, what you're doing with your land community initiative with food and such. You're doing that. I've got a project in my future in Tennessee, I'm going to be dealing with, and so on and so forth. And there are enough people there to effectuate change. We'd like more, but we'll take what we can get and then try to expand out. But ready or not, it's coming. And we just, you got to get on the boat. It's like Noah, you got to get on the boat, ready or not. There's no more dilly dallying. And I think people are fed up. They know something's wrong, but they don't know how to diagnose it. And hopefully we're doing a little part to effectuate the change and bringing that to light. Then there's another discussion that I know you talk about, Greg talks about. I don't think enough people talk about it. And that is, what about the 10 to 30 Treasury yield markets? They seem to be flat for the moment. It seems to be a very strong control on the yield curve. It seems to be a strange phenomenon to me, at least, as the debt market is supposed to be stable, supposed to be like a rock, and everything derives its value from what's happening in the debt market. Do you find this to be strange as well, or merely a sign of the transition of monetary systems to something new?
Well, actually, which they don't even publish anymore, but if you want this, you let me know and we'll send it to you.
Okay.
They actually handed over the Treasury market that's supposed to be that rock solid stable in 2013. And I have a chart TYVIX, which they don't publish anymore. They stopped doing that, I think, in 2016. But very, very clear. You can see it. It's like an EKG where we have the stable 10-year Treasury. There's your foundation. Then once 2008 hit, which is really when the system died, and you start to see more volatility. But by 2013, that where the traders have gotten involved in it, you see the volatility going like this. So the fact that the people can't see it is kind of not relevant to the fact that it has actually been degrading since 2013. I mean, obviously, hugely. You know, having said that, why is debt stable? I mean, does anybody ask that, right? What is it? If I owe you $1 million, I have a problem. If I owe you $1 trillion, you have a problem, right? Debt, there are two types of debt in this world, right? There is self-liquidating debt. So, hey, you go get an education, you get rid of a job, and that job pays off that debt. Or you open a business and people come in, you make money, you pay off that debt. Self-liquidating debt. But is that the kind of debt that the government does? No, they do non-self-liquidating debt. So now an example of that is you go and you buy all your suits on a credit card. Well, those suits aren't going to help you pay off that debt. So now you have to pay it off from earnings elsewhere. And that's what governments do. The idea is never to pay that debt off, because if you did, it would pull money out of the system. And that's what a deflation, like a recession or whatever, you can look at the monetary charts and you see that takes money out of the system. And there's only one way to fight that, and that's with inflation. That's it. So this is not rocket science, and it's simple enough, I think, for anybody to understand. When there's only one way to do something, there's only one way to do it. You fight deflation with inflation, you fight inflation with deflation, and who gets caught in the mix? Because every time they fight the deflation with inflation, that pushes the value of the currency anywhere in the world down more. So
it's interesting, because I like the way that, thank you for that. I like the way that X22 sort of characterizes it. He calls inflation a hidden tax. And
100%.
And what you're describing is a vicious circle with the inflation deflation. It's just this dog chasing a tail it's never going to catch. So it's a pointless, fruitless exercise. But I think that goes to underscore, before my last question today, why President Trump's going to remove the Fed, because we don't need it, as you said. And we only owe, actually, if you look at the math, they say 37 trillion or whatever it is, but actual debt the people owe is only about 10 billion. The rest of that is the bad guys just screwing us over and over again. So we could stick it back on them. And by resetting the gold standard, it would take a lot of the steam out of that. And that's why I'm really rooting, like you, for Judy Shelton to take prominence, which leads me to my last question. We talked about Fed Chair Powell. If President Trump, I think he's going to fire him, but if he didn't, how can he get I'm just curious to explore the space. How can you get Judy Shelton in there? What role would she play in relation to Scott Bessent? And what would he do? Where would he go in the administration?
Well, that's a really good question, and it's interesting because I don't know. I mean, I've heard it
Yeah.
bantied about that Scott Bessent would become the Fed chair for a minute,
Mhm.
and that there could also be running a shadow Fed chair, right?
Right.
So Judy could certainly fit in that category. And when I say the Fed is not necessary, well, in a fiat system, you need somebody to regulate the rate and speed of inflation and to transfer the wealth in a relative to corporations, from individuals to corporations, in as invisible a way as possible, and also to be the scapegoat. I will say that historically, that's why central banks always used to have a charter or a life of 15 to 20 years, because then the government could use them when they hyperinflated the currency, which was really the government's choice too,
Right.
to say, well, oh, they're gone. So yes, we've got to be back on the gold standard for sure. And I'd love to see Judy Shelton in that position, but I think she could be the shadow Fed chair. That's
I
what,
love where you're going with this, Lynette. So let's in the initiative of exploring the space. What about this? Tell me what you think about this. What if Bessent's there to be a placeholder, like you said, and then Judy comes in as a shadow person, and then President Trump gets buy-in from the public, consent, as you said, got to get people on board. Hey, we don't really need the Fed. It's a private corporation. It's British. It's never been part of us. As Greg likes to say, it's no more federal than Federal Reserve or Federal Express.
right.
But then he gets buy-in, so everybody dumps the Fed. Then they bring, as she comes shadow, she comes front of scenes. Then she's the new Treasury chair, and the Fed goes away because the Fed was baked into the Treasury really during 2020, and then they make that come public, and then you have this transitory thing. Is that possible?
Yes, I would say that that is possible.
Interesting. I'm gonna have to see how this plays out, but I'm very excited to watch.
Really, as scary as some of this stuff is, we could not be living in more interesting times,
Fighting.
because I'm getting chills. I mean,
Yeah.
such a huge, it's a huge shift, and it presents a huge opportunity for the public to take its power back. And
Absolutely.
really, what we're doing is leading a very peaceful movement, because all you have to do is convert your garbage, this stuff,
Mm-hmm.
sound money. That's all you have to do. And if enough people do that, we have what we need to take our power back. Gold redeemable money.
What does President Trump say? Peace through strength, right? Beautiful things don't ask for attention. They don't need to. Like our Sun Tzu Art of War, right? The battle's fought in the mind before it's ever fought in the battlefield. So it's not a physical battle; it's a spiritual and a mental one, and that's what we're attempting. Or I believe we're aspiring to do, is to do this very quietly and subtly, just move the people forward in a winning position. So.
Exactly.
And I really appreciate you for that, amongst many things. So, Lynette, as we close up today, last thoughts for the audience, and where can people find your work?
Well, I would say stop procrastinating, because we don't have much time, and timing is the biggest challenge. So, I mean, we could wake up. I don't think so, because we still have parts to do, but we could wake up tomorrow and it'll be over. So get it done. Stop procrastinating. And I'm very prolific on YouTube and Twitter at the Lynette Zang, on Instagram and Facebook at Lynette Zang, and of course on our website, LynetteZang.com. And on Tuesdays, every Tuesday at noon Arizona time, I do a live Q&A. So I'll talk a little bit about what's going on, but then that's just every and any question, everybody is welcome to join.